What's up, my people? What's up, millionaires? What's up, traders? And welcome to another beautiful video. On this video, we're going to be talking about the differences between Forex trading and synthetic indices trading. All right, because if you check most of the comment section of my videos, traders are asking, what is Forex trading? What is volatility, or what is VIX trading, and which one should we focus on? Volatility indices trading is also known as synthetic indices. So a volatility index is a synthetic index. So what's the main difference between Forex trading and synthetic indices trading, or Forex trading and volatility index trading, and which one should you focus on? I'm going to be using live examples. I'm going to be using live instruments to show you guys the differences so that you can better know which asset to focus on. We're not going to even waste time on the intro because I guess you guys already know who I am. My name is Ndemazeah Godlove. I've been trading Forex for 10 years. And on this channel, I share tips about trading, business, personal finance, and tips to help you stay profitable on a consistent basis. So if you've been watching me and you haven't subscribed, make sure you smash that subscribe button below to subscribe to the channel so that you can always get awesome content like this. Main difference number one between Forex trading and volatility indices or volatility index trading is market traded. So what are the market traded? Currency in Forex trading, the market traded are currency pairs, e.g. Euro USD, Great Britain Pound USD, Great Britain Pound JPY, and all of that. So that's traded in Forex trading. And then the market traded in volatility index is just volatility index indices like VIX, VIX 75, boom and crash, jump 500. So those are the market, right? Let's go to the instrument. The instruments traded in Forex, you have spot FX. I'm going to explain all the differences, don't worry. You have spot FX, you have CFDs, you have futures, and you have auctions. Spot FX is when you deposit into your trading account, if your broker doesn't offer you any leverage, you are trading with zero leverage, meaning if you deposit $1,000, the leverage is 1:1, then that's spot FX. Most of the traders in USA, they have spot FX, or maybe their leverage is just about 1:10. Now, CFDs is when you are being traded using what they call margin trading or leverage trading. So if your broker can give you a leverage of 1:100, 1:1000, and all of that, that's CFD trading. Futures trading is when you are trading using contracts. You can buy a contract from that asset. You want to trade, and options is just when you buy an asset for a future expiry date. That is it. So those are the instruments that are traded in Forex trading. And then in volatility indices, the instruments are CFDs, indices, and synthetic indices. All right? CFDs, indices, and synthetic indices like VIX 75, on Derif, and all of that. Underlying asset, very, very important. The underlying asset in Forex trading is real world fiat currency. So real world, in real time, real world fiat currency like maybe the euro, the dollar, the pound, the Canadian dollar, the franc CFA, the Nigerian rand. So those are real world currencies that are traded in Forex trading. But in volatility index or volatility indices, you just trade market volatility, no physical access. You are just trading market volatility or a computer simulated program. All right. So volatility indices, for example, in short, the best explanation, you are just trading a computer simulated program that mimics market movement. You are not trading any real-time asset. While in Forex trading, if you are trading Euro USD, you are actually trading real-time or real-world fiat currencies. Very, very important. Liquidity. Liquidity in Forex trading is extremely high, traded 24 hours a day and 5 hours a day globally. So liquidity is very, very extremely high in Forex trading, and Forex trading is traded 24 hours a day and 5 days a week. Liquidity in volatility indices or volatility index is moderate and varies by platform. For example, V75 is broker created. So VIX 75 is just created by Derif. All right, so it's broker created. Let's go to volatility. Remember, I've already spoken about liquidity. We make money in Forex trading based on liquidity. Then volatility is the extreme to which the market is very, 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 very violent, right? So in Forex trading, the volatility is medium to high, varies by pairs and sessions. So there are some sessions that are more volatile There are some pairs that are more volatile. But now in volatility indices, volatility is, that's why it's called volatility indices, right? Or volatility index. So volatility is very, very high, especially VIX 75, known for extreme moves. So that's something you also have to consider. So risk level in forex trading is high. Depends on the leverage and strategy you are using. So the higher the leverage, your broker is giving you, the riskier the strategy. But in volatility indices, the risk is very, 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 very high due to extreme price spikes and movement. Remember, this is a program that is created by the computer, a computer simulated program. So you expect the risk level to be very, very high due to extreme price and spikes and move. Let's go to leverage availability. Widely available in forex trading, up to 1:1,000 in offshore brokers, and then usually high on synthetic indices and varies on VIX. All right. Then trading hours, I already mentioned forex trading is traded 24 hours a day and 5 days a week, while volatility index or synthetic indices are traded 24 hours a day and 7 days a week, meaning it's traded non-stop around the clock. Then technical analysis, widely used and reliable. In forex trading, if you are trading your Euro USD, Great Britain Pound USD, CAD JPY, your technical analysis, your technical reviews, they are widely used and they are reliable. You can rely on those technical analysis. But in synthetic indices, technical analysis is also used, but sudden spike can defy technical setups, right? So sudden spikes can change everything on your setup, and you should be very, very wary of that when you are trading with synthetic indices. Let's go to fundamental influence. Remember, 80% of the forex market is moved by fundamentals. So the difference in fundamental influence between forex trading and synthetic indices is, in forex trading, forex is strongly influenced by news and economic data, while in derived by market sentimental and fear. So derived is only influenced by market sentiments and fear. Since it's not real, since it's not something which is, you're not trading a real fiat currency, you're not trading a real asset, you're just trading a computer simulated program. So it's not influenced by any fundamentals, all right? Then accessibility. Where can you trade forex? Where can you trade synthetic indices? Accessibility offered by most brokers. So if you want to use my recommended brokers, my recommended forex brokers, check the link on the video description to see my recommended forex brokers. Then volatility indices or volatility index is limited to specific brokers, e.g. derived for VIX 75. All right, and then best for. So who is forex trading best for, and who is volatility indices best for? So forex trading is best for currency traders with macro analysis expertise. All right, forex traders with macro analysis expertise. So if you're a forex trader and you want to understand how different currencies work, you want to understand how different fundamentals affect the movement of different currencies and all of that, then forex trading should be for you. Then who is volatility indices best for? For high risk takers, people with high risk appetite, people with high risk tolerance. Those are people who can be able to try out volatility indices. Then profit potentials. What are the profit potentials when it comes to forex trading and also with volatility indices? So profit potential of forex trading is consistent with strategy and risk management. So if you have a good strategy combined with proper risk and money management, then profit margins are very consistent. Consistency is the key. Consistency should be your goal. All right. So just hearing this word consistent, it means obviously I'm already gearing towards forex trading. Let's go to volatility index and we talk about the profit potentials. The profit potentials for volatility indices or volatility index, the profit potentials are very high, but with increased risk of account blown out. Profit potentials are high, but with increased risk of account blowout. Increased risk of account blowout. Will you prefer a strategy that is consistent and ensure that you make profit slowly and gradually, or you prefer a strategy that is having a very high profit margin, but with the ability or with the potential of account blowout, with the potential to blow out your account? Which one are you going to prefer? If you're someone like me, I would definitely go with Forex, that the profit margins are consistent, but I'll be guaranteed that I'll have a gradual growth, not guaranteed that I might blow out my account at a point in time. So emotional discipline needed. So let's talk about emotional discipline. In Forex trading, you need high emotional discipline, all right? You need very high emotional discipline to not suffer from FOMO, to not suffer from greed, to not suffer from fear, to allow your trades to run, to stick to one strategy. So all of that is summoned down in the bracket of emotional discipline, all right, which is needed. So you need high amount of emotional discipline to succeed in Forex trading. Then going to synthetic indices, you need extreme amount of extreme high amount of emotional discipline before you can succeed with synthetic indices, because like we said, prices spikes up very, very fast, more than what you can even predict in synthetic indices. So if you are someone who is having a very low risk tolerance, if someone who is having very little emotional discipline, don't try out synthetic indices. So what's the takeaway from this particular video? For me personally, I trade both Forex and synthetic indices. My strategies, I always want to be best all around, in a sense that if I come to Forex and I don't see Forex strategies that are working, I have synthetic strategies that are going to be working. If I have synthetic strategies that are not working, I know that if I go to Forex, I'll find something I can always trade. So you should do that bet. More than 80%, or about 80% of my entire trading is in Forex trading. That's even too small. About 90% of my entire trading is in Forex trading. Just about 10% is in synthetic indices. So you should be able to do the same. Have just a small percentage of your portfolio invested in volatility indices or in synthetic indices, and then majority, at 90 to 95% of your portfolio should be in Forex trading for all the advantages I just mentioned, like the accessibility, the fundamental influence, technical analysis is widely used and reliable, the leverage ability, the risk level, volatility, liquidity is extremely high. So for all those reasons, it's then summoned down and it tells you that the best one you should be trading with should be Forex trading. All right, I'll always go for Forex trading. And if you have to choose just one, it should be Forex trading. If you have to choose just one for beginner Forex traders or beginner traders, it should be Forex trading. And then when you get some amount of knowledge, and then you can start testing out synthetic indices. I only started testing out synthetic indices only after about 3 to 4 years of trading the Forex market, before I was like, okay, let me try out different assets to see which one I can actually make more money. And today, I can trade stocks, I can trade synthetic indices, I can trade stock indices, I can trade crypto, I can trade commodities, metals. So learn to be able to diversify your risks and your portfolio, and that is why we are always on top and we keep making this money. Let me know your thoughts on the comment section. Share this video with someone. Click that subscribe button below to subscribe to my channel. And if you want me to mentor you one-on-one, make sure you check the mentorship link on the video description. If you are looking for a 3 years in a row Forex robot that you can use on all your Forex account or your Profirm accounts, check out the link below to check out or to purchase Perps Pro. You should be in my free Telegram community, all right? So my free Telegram community, all my recommended brokers, check the links on the video description, and I'll see you guys on these other videos. Peace.